Good morning, everybody. Well, I can't say this is a surprise after Friday drubbing that we saw. And, you know, one of the things that I think about, and who knows if they're going to come and buy the dip aggressively again. They're going to buy at some point. And I think that makes a whole lot of sense from an intraday trading point of view, not from a swing trading point of view. But I think I mentioned this in the room or pre-market. We talk so much, Dan and I forget what I say from day to day, honestly. But you know, one thing that we always want to share with others is that are getting started in the markets or have been for a short amount of time is that markets always go up continuously or down continuously once that trend starts to the point where you're wishing, you're pleading for a trend change. And, when you get to that point, it's one of the signs that it's probably coming. And, it appears that this is that. And in addition, there are things that you see happening as warning signs, like the 10-year trending down as much as it has. And now it's gapping lower. And this corona thing that we're all sick of hearing about and seeing like everything was going away, just with vaccines and so on. And so now the news has kind of like been coming for the last week or two. And then now, okay, of course, now that the market's gapping down, and it was pretty
Hey,
much
Greg, your charts,
what, Dan?
charts.
Yeah, I'm getting to the charts, man. I know you're excited to see the charts. I was going through my little talk here, and so anyway, what I was saying. Oh, so this thing that kind of like festering under the surface. In retrospect, you look back and say, like, why, if everything is improving? Well, as institutions have vast amount of money to see what's going on around the world, they will be aware of things before, say, the media talks about it or we would hear about it. I guess unless you're always reading financial media across the seas and what have you. But maybe this corona thing, which they say, oh, there's outbreaks now in the UK, which is the most widely vaccinated, from what I read, and in different parts, and maybe the anticipation of the next lockdown or slowdown, and why interest rates were going down. And anyway, our job is to look at the charts, read the information that's available to us, like interest rates and the transportation index going down, and all of those things that give us insights as to what's happening, to the possibility of certain things changing, and whether it was market internals or interest rates and so on. We see these things happening. We just don't know the moment it's going to happen. And Friday, which was the options expiration, which certain things triggered, hey, it's going to hold up here or go up. Well, the whole thing fell apart, and that of itself was bearish. So we'll see where this all goes. We've all been here before with, well, there's a pretty big gap down. So having looked already at where the spiders are in relation to this pivot low, they're about here as it relates to SPX. So the 50 MA is right here. That's going to be a big institutional focal point. There's a gap here in the spiders. And so I'm thinking this level, this minor support in the 50 MA, if things don't just rip right up from the gap down, that this would be a pretty reliable place, because that would be a big move to the downside to get down there. And that's a significant reference point down there. And 4,300, well, this is below 4,300, obviously. Well, 4,300, Just looking here, and 42.39 is way down here, right? And that is, let's back this up a little bit. Yeah, this is that gap area, and 42.39 down here. So there's really little to no support somewhere in here. Anyway, so as far as SPX goes, there, based on what I see, and now if this is updating pre-market, I'm not so sure. Yeah, it looks like it is. And here, I was thinking, it was like the premiums are popping so much, it's attractive to get closer to the danger. Will it actually get down there? Because there's some pretty good juice even at just below 4,200. So coming down here to 41.90, 41.85. So Gamma says 42.40. Well, to me, that's irrelevant, but okay. As far as SPX goes, I don't, there's nice juice there, but I'm not going there. And so, down here, I'm always looking for the no-brainer because the pain is too excruciating if you get on the wrong side of this. Less is comfortable. And, when they're offering premium way down there, well, okay, let's see if it plays out, McGraw. If I'm not mistaken, you were mentioning that the Gamma said it was going to go up on Friday, and obviously that didn't happen. So, I read that article that you sent me, and it's all interesting stuff. So I look at it in a respectful way to say, what can I pull out of this? And one of the things that I always gather from whatever the approach is, and there aren't too many that I look at other than what we do. Okay, that's I have to believe in my own method, so take it for what it's worth. What I'm saying here is that I don't look at too many other methods of having valid information that's useful to me. Now, this Gamma thing, as far as, and it was interesting to me that they said volume is secondary. It was interesting to me in the article that they said looking at just open interest was kind of the old way of doing it. And they have advanced things into, and this is, I guess they were trying to sell their service, is to analyzing every trade that happens. And that's a vast amount of data. And of course, why you would want to pay them to do this. And this wasn't the Spot Gamma guys. This was a different company that does the same thing, and where they do all of this analysis on every trade to know whether the market makers are long Gamma or short Gamma, and was all pretty intense. And I guess crunching all that information and looking at all that is why you would pay them what they're offering. That being said, if I can just look at open interest, which is I have found to be of value, and equate that to a chart, which these guys don't look at charts, or they don't know how to look at charts the way we do, it takes all of that, what I call brain damage, away. And it's brain damage. It's not brain damage to them because these guys are big brains. But to me, to decipher that information is brain damage for me. So I look at the chart, I look at the open interest, I look at trends, I look at what I know, and I say, how does that relate? And I know when I see that big open interest, I've already defined, because I've done my own little eyeball back testing as to what happens when they reach these inflection points. And I've recognized the patterns that occur that create these squeezes, which is what we're interested in. So, it was all good. I appreciate you sending the article. I went through most of it until I started to become a little overwhelmed, and then I got, okay, they're crunching all of this information, and that's where their service is going, and so on. So if you get the data and you have the tools to crunch it, I suppose it's, worthwhile to point you in a certain direction. But if you can read the tea leaves of what we look at here day to day. And they're big on, everybody are big on SPX and so on. Look, I'm just looking to, from the training day thing, I want to go home at the end of the day. I don't want to feel the pain of being on the wrong side of this stuff. So anyway, it's all good, and appreciate you sending me all that. So look, down below here, we look at things as, of course, as probabilities, and to say, is it possible it's going to go down here today? Of course it's possible. Is it probable? No, I don't think so. I mean, that's the only way you can look at it, is saying, what is the possibility of that happening? And then, as we all say, we create beliefs based on our method. We press the button and risk our money. And that's that. So there's an ugly gap down. Let's look at the futures. Let's clear the mess I made on the chart. Part of it made sense. That's why I'm saying, what you sent me, as I read it, it started to make sense. And so the most interesting thing, and the most thing I wanted to learn from the article, was the definition of being long gamma or short gamma. And where it led was crunching all of the trades. Now, I can't do that because I could do it. I don't want to do it, meaning I could pay to get all of that data and then probably hire somebody to put it in a format that's readable for me, or I can pay this guy what he wanted, $80 a month, and he's going to tell me what it is, which would probably be a better choice. That being said, just looking at where the big open interest is and looking at the charts the way we do, that makes sense to me too. Yeah, I mean, so, maybe, we can turn on your mic and we can have an open discussion in the room one day about all this, and be a benefit for everybody in the green room that, we've been talking about this stuff. So anything that any of us can take, to within our trading plan to help us determine turning points in the broader market, whether trading the market or, futures or an individual stock, is all helpful. And in any event, even if we choose not to use it, some of us do or not, it's interesting. So it's all good. Okay. So, all right. They're still going down. I tried to hold here, and the momentum is slowing. And so momentum slowed here. No cigar. Couldn't take it higher. Right? Trend is your friend, as they say. Right? Momentum is slowing. Can it turn around? Not so yet. I think that most will want to wait for the market to open, unless there's a wide range bar, which is, that's the power bar, to say, hey, we don't really have any wide range bars here. That one's a little wide, but it couldn't get through the pivot high, back down. And so little support here, it's breaking the pivot low. And, what I showed on the spiders, was that unfilled gap area right here. So I think, looking at the futures, that somewhere in here is where buyers would step up, and that simply look at the left. Let's add a subjective reference point like the 50 MA that institutions look at. And then when it gets there, we see what happens. Right? So right, the 50 MA on SPX is down here. Right? A little further down because futures have more data, the overnight data. Qs. Right, so this is at 354, 354. Holding the pivot low, so showing relative strength, right in this area here. So that's of interest to see how much this holds at the open. Let's see where the futures are. Right down here, beginning to bottom. Got a wide range bottoming tail bar, what we call a range expansion. So a downside shakeout. You can see it maybe more clearly on the 15-minute chart. It's going sideways here. So Whether that has been enough, we shall see. But this is the beginning. Look at the weekly chart. So anything we're seeing here pre-market, unless this has, a monster turnaround, who knows? We'll see at the end of the day. This is just short-term stabilization because the weekly chart is just starting to get going here. And as I mentioned in the letter over the weekend, this could come down quite a bit and not do any damage. And that's a good thing. Well, the strength, whether it's a wide range bar, and if we condense this, it's a wide range bar, which created a void. We're looking at smaller time frames. And what showed relative strength can fall further without doing damage to this time frame. Whereas looking at SPX, right, it showed relative weakness, was still doing well. But look how close it is to the pivot low. And it's actually down below that. So, breaking below that and closing below it is violating the uptrend here. So it's no longer in an uptrend. And this has got a decent distance to go, and it should stop in the area of what we call minor support because it isn't an uptrend. But now, what I don't like about this chart is that it stalled and had, it's not that significant a turn, but we got a red bar. We'll see at the end of this week whether it's a red bar ignored, but this was a pretty long resting period. So after long resting periods, you want to see a red bar being ignored. We'll see if that plays out, because if it doesn't, well, that leads to confirmation of the short-term bearish information we're seeing right now. And YM. I didn't know what else to say about this in the letter, or the advisory letter, than to say what a mess, and then explained what it is. But look at the nasty down move that's happening here. And it's not a nasty down move after multiple bars down. This is just getting started. Now, whether it holds here, that's the unknown. You see the swing low there and where it rallied from. It has made a big move. I suspect it goes down below it at the open and maybe comes down here to the next reference point, and the S&Ps get down maybe to that 50. So you got to watch this stuff and then see, hey, that's where we could have this at least intraday bounce, and then we'll see how far it goes. Russell led the way down, back down to the bottom of the trading range. Wow. Let's go to IWM. With this 180 reversal here, we spoke about possibly this thing being the best performer in the second half of the year. It needed to break out, go sideways there. Clearly that didn't happen. And then you look, well, from a swing trading point of view, we'd look for a retest thing. But look, we have to learn from the past. This market has not been one to provide us such great opportunities with retests. The buyers have been so aggressive that they've, come off of V bottoms. So if we see a wide range bar coming off of the low, and then we see a little consolidation at the top of the wide range bar, we're going to have to go for it with a big stop. Okay. So, the old definition of insanity is doing the same thing over and over again and expecting a different result. Well, W bottoms are great. We love them. And even larger head and shoulder type of bottoms or shakeouts. But even with this disgusting chart of the Russell here, where is our W? This is kind of a W, but, they've been so aggressive with the thoughts of, stimulus and the Fed and so on. And that might be at a changing point. We'll see what the charts form. Interest rates, you can see breaking below the 200. We talked about this last week. I talked about the fact that the 30-year was already below the 200. And let's see, the 5 years coming down. So they're all acting in unison, which is saying, and I guess this must be the Corona thing, that things are going to slow down. Go pull out your Louis Vuitton mask. You're going to be, inside your house with a mask on with your family and, hovering in the closet, and then who knows, maybe they'll send out more checks to people so they can stay at home and not work. I don't know. I think we're all frustrated with this anyway. Yeah, a lot of babies will result. Maybe that's the good part, Robert. Right. Oil coming down, that's in alignment with a bearish view of, interest rates coming down in a slowing economy. Who needs oil, if nobody's going to work? And we can take a look at, let's see if I get pre-market data. Wood, this, if you look at the price of spot wood, this up here is $1,700. It's fallen $1,000. And now it's rolling back over again. So there's another piece of information. And, we could look at copper, which is, okay, all of these things was like, and part of the comments we've had over the course of these weeks is like, hey, if everything is so great, why are all of these economic sensitive pieces of information falling apart? And here it is. Now we have, I guess what the worry is, that institutions were, focusing on, besides just things going up as far as they did. So we'll see what shakes out. Gold, right, turned back down again. Silver, right, that came down. It just couldn't go up, accumulation, and it went down last week. And of course, the transports have been lagging the whole time and turned down on Friday. So bottoming tail bar, couldn't take out the high, all these little bearish signs, but the markets wouldn't give it up until Friday. So there you have it. Well, yours, Dan. I know I only gave you a few minutes, but sorry.
Oh, no worries. Anytime. Yeah, I can just fill in the time. So we're pretty light on inventory. We only have two opens in the weekly options trader, and Friday afternoon we were aggressively scanning for shorts. We scanned like 500 stocks. We entered a couple of them. So our advisory is light also, but balanced. We entered Met. We entered a couple things. We were looking for things that did not have multiple bars down. And pool, here's one, but it had light volume. That's not it. Door, not pool, door. See this? It's not fluid. It's a continuation pattern and closed at the low, bearish weekly. So I would have given that, but just it's under 100,000 volume. So we're balanced. Looks like, and we had two stocks that were long, that were acting fantastic. SPAC and BLL. I had moved the stop on both of those to break even, and I can't see where they're gapping, so we'll deal with it at the market open. So it looks like low, LOW, is the only possible problem child here. We have a put spread under this green bar, and we're not stopping out, but it's deep. It's deep. Otherwise that was a beautiful gap. That was a beautiful put spread setup. It was a no-brainer. We gave predominantly shorts in the weekend letters, and I sent out a telegram saying, hold off on them, hold off, because the gap's too excessive. I'm not entering anything. Let's look at a couple of new things here. I just saw this thing going by, the ticker SGOC. 60% pullback, whatever, but some overlapping bars here. This looks like a possible 30-minute high. Oh, and I periodically send Greg little pictures of the Reddit boys just trashing the innocent people who are trading AMC for a short squeeze and these poor innocent people, well, I'm calling them poor innocent, but that's probably not the right word. But there are these people that are crying for help because they're just losing money day after day after day, and they're like, where's my mercy point? And then they call them the apes. The apes just all kick in. Don't you worry about you losing money. This thing's going up. And I gave this as a core short right here on this gap down day. Look at this. Right there. I said core short this thing. Target 20 bucks. And I am well on my way. So, pity the fool that just wants to blindly follow apes. There you have it. Greg mentioned TLT. This thing, recent IPO, no pattern right now. We'll keep an eye on it. Cruise ships getting whacked. They've been weak. They're getting whacked for multiple reasons. They're in the tourism industry, so jets and hotels have been weak. And now I just read here in Florida, and they were suing the CDC, and they won at the district level, and now the 11th Circuit Court of Appeals reversed it in favor of the CDC. So that's gonna, probably put more pressure on these things too, because more restrictions, there's less customers. Yeah, Greg mentioned oil, and the OPEC's gonna pump some more, so that's another negative. More supply. Jacopo, Bib, VLDR. Yes, Sebastian. VLDR. Yeah, that's a beautiful short pattern. See, it was a climactic, but then the climactic went sideways for 8 days with a little breakout failure. So 30-minute low. Sure, you can short that. I mean, I say sure, and I'm given 30 minutes. It's also going to depend if the broader market's bouncing or not. IWM has a higher low pre-market 5-minute. The other ones have stabilized, the other 3 index horsemen, but they've stabilized in a nasty downtrend. So I have zero confidence here at the open, of what we're going to do. Bib, it's a bio, so you got higher risk, but sure, that looks lower, Jacopo. And Playboy, yeah, just continuation. Your beautiful entry was, this gap failure breakdown. So Greg, me with my tight stops, I was tempted Friday to take our money and BLL and SBAC, but I instead just did a compromise of break even. So now
It's
they're
okay. Always a good choice. We don't know what's going to happen.
no, right. But my point is now they're gapping under that break even, so got to deal with that.
Just kill it.
I'm just making a commentary.
Mm.
We are in Yum C. We've been in this for a week. This was in last weekend's letter. And I said Friday and in the weekend video that looks like a great ad. I had moved the stop to 30-minute high, folks, if you don't have Telegram, but I might even do it tighter if the market starts rallying.
I covered Starbucks. I know it's weak, but it's a relatively strong stock, so took the money.
Starbucks. Yeah, that's a nice gap. I mean, the only thing I would say if you wanted kind of a bigger gain is just do half. You know, give the market at least 5 minutes here. Spiders. Yeah, it's
Focus
a
on
big.
a possible turn, which isn't really happening yet. Wide range, whippy, first 5 minute bar. So
Yeah.
let things calm down.